Assalamualaikum to our respectful lecturer, which is Dr. Harid. I am the representative of Group 5. Is pleased to present an insightful analysis of the webinar titled Crackering Earnings Surprises with Quantitative Strategies, featuring by Mr. Yuan Tingjing, who is the Chief Operating Officer of That Optimus. We choose this webinar because it offers a unique perspective on how investors can approach earnings season in a more structured and strategic way. In financial market, earning announcements are often associated with the uncertainty, sharp price movement, and emotional decision making. For many retail investors, this period feels unpredictable, almost like taking a gamble. However, this webinar challenged that perception by demonstrating how market volatility can be approached systematically through data and quantitative analysis rather than relying on speculation or instinct. One of the key concepts introduced by the speaker is post-earnings announcement drift or PEAD, which refers to the tendency of stock prices to continue moving in the same direction after an earnings surprise. Instead of merely guessing whether a stock price will rise or fall after an announcement, Mr. Yuan explains how investors can identify potential trading opportunities using a disciplined, role-based framework supported by historical data and market behavior. Secondly, volume analysis is emphasized as a confirmation tool. Sudden spikes in trading volume can indicate stronger market conviction behind a price movement that can help investors avoid weak or misleading signals. Most importantly, the speaker stresses the significance of risk management, particularly through the implementation of a strict 80% cut loss rule. What impressed our group the most was the speaker's transparency and realistic approach. Rather than only showcasing successful trade, he presented a back-tested strategy that also acknowledged losses. This demonstrates that successful trading is not about winning every trade, but about maintaining discipline, managing risk effectively, and applying a proper position sizing.
For the process, we started by divided into group of 5 members. My group consisted of Nurul Fazana Nasuha, Nur Sharmila, Nur Ishira, Nurul Izzati Shahira, and myself Sharifah Nurdaini. Next, we selected a topic that related to the technical analysis of the financial market and searched for a webinar that matched this topic. We found a webinar that recognized by the Bursa Malaysia. Without wasting any of our time, we registered all of our group members to join the webinar. After we registered, we received a Zoom invitation link from the organizer confirming about our participation in the webinar on 22 April 2026 through email. On the day the webinar was held, the session was presented by Mr. Yuan Tingjing, the COO of TED Optimus and a recognized CFA charter holder, which is Chartered Financial Analysis, and he also was a former equity research and a proprietary trader. In the webinar, he presents a data-driven framework for trading during the earnings season, which is when the market is actually expected. The session makes us explore and identify when is the profit during the earnings surprise and post-earning announcement drift, which is PEAD.
On this slide, I will summarize the key concepts and strategy framework behind trading earnings surprises. First, an earnings surprise occurs when a company's earnings per share or EPS exceeds analyst expectations. When a company reports better than expected earnings, it often creates positive market sentiment and can lead to continued stock price momentum. Another important concept is the post-earnings announcement drift or PEAD. This theory suggests that stocks prices may continue to move upwards even after the earnings announcement as the market gradually reacts to the new information. Based on these concepts, the strategy consists of 5 main steps. First, identify stocks with earning surprises. Second, filter for liquid stocks with sufficient historical data. Third, confirm volume spikes and positive price momentum. Fourth, rank the selected stocks based on their momentum strengths. And lastly, apply proper risk management and diversification to control investment risk.
I will be presenting the practical takeaway from the webinar, Cracking Earnings Surprise with Quantitative Strategies. First, the timing of earnings announcement can influence stock performance. According to the webinar, companies that announce their earnings on Friday may experience a stronger post-earning announcement drift, or PEAD, because investors have more time over the weekend to react to the news. Second, this strategy tends to perform better during a bullish market environment. When market sentiment is positive, stocks with positive earnings surprise are more likely to maintain their upward momentum. Another important point is to be careful of one-time gains. A company may report strong earnings because of non-recurring events, such as selling assets. Therefore, investors should evaluate whether the earning growth reflects the company's actual operational performance. The webinar also highlights the importance of technology in trading, such as quantitative analysis, AI, and backtesting can help traders test and improve their strategies. However, the speaker emphasized that these tools are only effective when combined with discipline and a clear set of trading rules. Overall, the key takeaway from this webinar is that earnings surprise can provide valuable trading opportunities, but successful investing requires a systematic approach, proper risk management, and consistency in following the strategy.
Through the webinar Cracking Earnings Surprise with Quantitative Strategy, our group learned how data-driven approach can help investors make more systematic and informed investment decisions. Before attending the webinar, we believed that stock price movement after earning announcement were difficult to predict. However, the webinar demonstrates that by using quantitative analysis and structured rules, investors can identify potential opportunities more effectively. In addition, we learned about post-earning drift, which refer to the tendency of stock price to continue moving in the same direction after a positive earning announcement. The webinar also highlights how factors such as momentum, trading volume, and company guidance can influence market reaction. This helps us understand the importance of relying on data and analysis rather than emotion when making investment decisions. From an academic perspective, the webinar was closely related to topics such as data analysis, risk management, and decision making. It provides a practical example of how concepts learned in class can be applied in real-world financial market. We also learned that effective risk management is essential in reducing losses and improving investment performance. In terms of teamwork, the webinar emphasized the importance of collaboration in understanding and analyzing complex information. Each group member contribute ideas and share insight, allowing us to gain a better understanding of the concept it discusses. Overall, this webinar broadened our knowledge of quantitative investment strategies and strengthens our teamwork and communication skills. So that's all from our group. Thank you.